how people send money right now and then how blockchain can benefit that. So the first thing is how people send money right now. It's usually a bank transfer at the end of the day. If you're giving money to a shop, they're taking that money and doing a bank transfer at some stage in the future with that money. Now there's limitations associated with that. You need a bank at the other end. The settlement can generally take 2 to 5 days. There's a currency exchange fee in there. This takes time, and of course there's the limits and transaction sizes imposed by the SWIFT network. That's the network that all of the banks run on, and there's a $20 fee for that. Blockchain itself, we alleviate those problems by doing an instant buy and a sell and on both ends. What this means is that in the case of, say, Hong Kong to the Philippines, we're converting Hong Kong dollars into Bitcoin, and then we're selling that Bitcoin in the Philippines for pesos. This happens instantly. It's an instant trade, so we can lock in the rates. They're guaranteed. That's what's given to the customer before they proceed with the transaction. And we can ensure that no matter what the price is, no matter what happens, that trade executes and it goes through and the money arrives at the other end. So for us, we're not really that concerned with volatility. We manage it that way. What we can do with this is we can provide cheaper remittances to many people, many different destinations around Asia without the limitations and restrictions imposed by the longer processing times or the minimum fees of the existing banking network or needing a bank, any of those sort of things. It's much easier to convey payments. Blockchain itself is a ledger. It is a history of transactions that have ever taken place. So you can think of it as one giant accounting ledger. It's one person paying one person and another person paying another person, and all of that is recorded as a historical ledger. So in terms of auditability, traceability, it's very open. It's the most open and secure system that we have. It's the world's largest computing network that's backed by a lot of venture capital investment as well. So this auditability of the network is very secure as well. Blockchain technology itself, in terms of AML KYC, many of these existing remittance shops have to take certain details from their customers right now when they go and do a transaction. So in the case of a cash vendor, they usually have to know your first name, last name, and Hong Kong ID in order to transfer money, and also who you're sending that money to. This doesn't change with blockchain technology. It's just that this remittance shop that is taking those details, instead of using the banking system to convey that payment overseas, they're using Bitcoin and cryptocurrency. They're doing that because it's cheaper, it's quicker for them. They make more money as a shop. But they're still collecting the appropriate AML KYC details associated with that user who wants to convey the money overseas. So Bitcoin is everywhere. It's a global network. It works on mobile phones throughout the world. All you need is an internet connection. With Bitcoin, you are your own bank, which means that you can hold money, you can store money, you can send money, you can invest, you can get a loan. And this really opens the doors to emerging markets. It means that for you to integrate with emerging markets, it's a lot easier than perhaps integrating with a local payment provider like a MasterCard or some sort of Alipay or something. If you want to build a network on top of an existing scheme, you usually have to integrate with some large company there, like Alipay, or if you want to go to other countries, you have to integrate with a lot of different vendors because each different country has a different payment system. Maybe they use prepaid cards, maybe everyone has a bank account, maybe they use some other system to convey payments. But Bitcoin and blockchain is everywhere by default. So if you build technology on top of this network, it means that it's much more scalable, and especially so in emerging markets where mobile is so important. And many people are skipping traditional means of getting a bank account, sitting in a queue, signing documents that take 2 weeks to get processed, when they can simply download a phone app and they're ready to go. They're ready to receive money. It really depends how the traditional players react to this. There is interest in this space. Obviously, if this is a way to reduce costs and friction for moving money overseas, then large incumbent companies that are moving a lot of money are very interested in this. This is a way for them to make more money and improve their margins. We'll have new emerging companies coming out with new remittance products based on cryptocurrency and blockchain technology. They will gain a lot of market share away from the traditional vendors. But also I think some traditional vendors will choose to embrace this technology simply because it can benefit their business and of course benefit their shareholders if they leverage something that's easier and quicker in order to convey value overseas. The greatest benefit for Bitcoin and blockchain technology is definitely in emerging markets which are already hard to access and hard to penetrate. There are billions of people without bank accounts. There are billions of people coming online onto the internet over the next few decades, and many of these countries, that are in this space are currently not connected online. They're currently, much of their population is not banked. So I think definitely blockchain technology has a role to play in reaching these new people and bringing them financial inclusion into the whole world's financial ecosystem.